students. Welcome again to our session today. So it is a continuation of what we started earlier on. And before we continue, I believe you've gotten that question that we asked the other time. This was a question. The ATM that you normally tend to use to go and withdraw some cash in your account, is it a debit card or is it a credit card? That card that you normally tend to use to go and withdraw your cash. Is it a debit card or is it a credit card? I know by now you must have you've done your research and at least you have that solution, right? In our last class, that is what we were looking at, whereby we talked of, I gave you the whole concept of cash book as well as the concept of bank statements and the whole idea of reconciliation, the whole idea of reconciling our cash book balances, bank column, and our bank balances according to the bank statement. We looked at the causes why we will be having the differences between our cash book balance bank column as well as our bank statement. And also key element that we had also talked about was the purposes of us preparing our bank reconciliation. Because remember we mentioned that whenever we are looking at this concept, basically is not only for exams purposes, because these are the concepts that you are supposed to apply them also practically, more so when it comes to the concept of bank reconciliations. Unfortunately, you'll find that majority of accountants, because they have gotten a job and maybe they are just in a certain sector, if you are in receivables, you are in receivables. If you are in payables, you are in payables. Tax, you are in tax. But you will be having a chance to prepare this reconciliation. I challenge you guys and I told you, like, if you can find time, as you are you are starting building your career in accounts, make sure that you've at least train on one of the accounting packages available outside here, including you understanding how you can reconcile your books. In our session today, I want us to look at the steps of preparing a bank reconciliation statement. We look at the format of our bank reconciliation as well as a question which will enable us to be able to understand the whole of these concepts clearly. So allow mwalimu to erase here because these are what we did in our last class. So the first thing that I want us to handle today is for us to understand the steps in preparing our bank reconciliation statements. So that should take us to steps in preparing. So it will be very important for us to understand steps in preparing a bank reconciliation statement. Steps in preparing a bank reconciliation statement. Steps in preparing a bank reconciliation statement. Again, I am insisting that whatever that you are doing here is not only for exams purposes, but rather we should be able to understand this knowledge clearly with the mind that we'll also be expected to apply it in the field. We'll also be expected to apply it practically. We should also be expected to apply it practically. That should be our drive. That should be our drive, not exams, but yearning to gain that knowledge. That should be our drive. So looking at the first steps, step number one, what must we always tend to do? Step number one, we should update the cash book with the items appearing. We should update the cash book with items appearing. This one I must write, even if you won't you should feel mwalimu should dictate, but I must write. I know the reason why I'm writing. So you're saying to update the cash book with the items appearing, in the bank statement and not appearing in the bank statement, in the bank statement, in the bank statement, and not appearing, with items appearing in the bank statement and not appearing in the cash book, and not appearing in the cash book, and not appearing in the cash book, and not appearing in the cash book. I know you feel that Mwalimu, you should just dictate this, but I know the reason why I must do what? The reason why I must try, so that if you put it down on paper whenever I've written like that, it will be very easy for us to grasp and understand. This is not like just like any other theory whereby Mwalimu will give us a lead and a way. At this point, I must explain everything because I know how important it is. So you're saying that the first thing is to update our cash book with items appearing in the bank statement and not appearing in the cash book, except for errors in the bank statement. Except for errors in the bank statement. Except for errors. Except for errors. Except for errors. Except for errors in the bank statement. Except for errors in the bank. Except for errors in the bank statement. Because the one that are in the bank statement, we can't control that. That is beyond us. That is going to be done with the bank. That is beyond us, so we can't control that, right? So you're saying that the first step always is to update our cash book. Because as much as you will be preparing your cash book, you'll find that we'll be having a lot of differences, probably with items that we mentioned, causes that we mentioned earlier on. So in that case, you'll find that to do this, adjustments should also be made for errors in the cash book. As we are doing all this, also adjustments should be made. Adjustments should be made. Adjustments should be made. Adjustments should be made for errors in the cash book. 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 Maybe you'll find that you did a transposition error. Maybe there are some errors that you had recorded them misposting. They were receipts, you record them as payments, or rather they were payments, you recorded them as receipts. All these are the items that you must take care of. Step number 2, my good students, step number two, we are talking of compare the debit side of the cash book. 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 Compare the debit side of the cash book with the credit side of the bank statement. With the credit side of the bank statement. With the credit side of the bank. With the credit side of the bank statement. With the credit side of the bank statement. And why are we talking of the credit side of the bank statement? I believe I'd mentioned that one when we started, whereby you mentioned that at any given point, anytime probably we are depositing our amount in our account, basically our account is credited. Account is credited. Account is credited. That's why you're saying that we compare the debit side. We compare the debit side of the cash book with the credit side of the bank statement. The bank statement to determine the uncredited deposits by the bank. To determine the uncredited. To determine the uncredited, to determine the uncredited deposits, to determine the uncredited deposits, to determine the uncredited deposits by the bank, to determine the uncredited deposits by the bank. A very important step that you must always tend to consider, because at this point there could be some checks that you have recorded as receipts, probably from your clients, but the same has not yet been credited in your bank. That will lead us to have the difference, and those are some of the main causes of differences that we mentioned. So basically at this point, this could be a kind of maybe term it as maybe error, whereby yes, you have received and you're very sure you have received this amount from your clients, but the same has not yet been credited in your bank. So it is very important that you compare your debit side, because debit side in your cash book, these are receipts. And the credit side in your bank statement, basically, these are what? These are the receipts. A good example, let me just show you a good example of what you are talking about, an extract of a bank statement, so that you should be able to understand this whenever we are talking of debit and credit. You'll find that on this side, this is just a simple extract of a bank statement, whereby in this case you'll find that I'm having withdrawal. You'll find withdrawal, basically these are on the debit side. These are the cash that are coming out, whereas our deposits basically are on the credit side. Deposits, believing that you're seeing withdrawals being on the debit, and you're seeing the aspect of deposits being on the credit. So you'll find that it is the opposite with what you are maintaining the bank statement. In your cash book, receipts are recorded on the debit side. In your bank account, receipts are recorded on the credit side. Receipts are recorded on the credit side. And that's why you're seeing that at this point, it will be very important for us to compare the debit side of the cash book with the credit side of the bank statement to determine the uncredited deposits by the bank. Step number 3, which is also very important. What you're supposed to do. Step number 3, compare the credit side of the cash book. Compare the credit side of the cash book. Compare the credit side of the cash book. Compare the credit side of the cash book with the debit side. With the debit side of the bank statement. Basically, this is to identify unpresented checks, to determine the unpresented checks. To determine the unpresented checks. And recall, we say that unpresented checks are checks that you have issued to your suppliers, but as at the end of a certain period, they have not yet been taken to your bank for payment, meaning that the suppliers have not yet presented these checks to the bank for payment. So it is very vital that, again, we must be able to compare our cash book and the aspect of our cash book credit side. These are the payments, and our bank statement debit side, because for debit side, as regarding the the format, or rather the aspect of a structure that I've shown you on the bank statement, you'll find that our withdrawals are basically on the debit side. So we should also be able to do that to make sure that if it wasn't kind of presented, I'll be able to know. Because on my side, I've issued it, but it's only that this check has not yet been presented to the bank for payment. A very key concept that, again, we must be able to understand it very clearly. Now, step number 4, which is the last step, because you're only having 4 steps. Last step, but also very vital. We are saying that prepare the bank reconciliation statement. Prepare now the bank reconciliation statement. Prepare the bank reconciliation. Prepare the bank reconciliation statement. Prepare the bank reconciliation statement. Prepare the bank reconciliation statement, which will be our step number 4, which is very important. And preparing a bank reconciliation statement, always have this in mind. You should always have this in mind. The aspect of the unpresented checks, the one that we've noted in number 2, or rather number 3, the aspect of uncredited checks, the one that we've mentioned in number 2, as well as looking at the adjustments, the one that we've mentioned in number 1. These will include, of course, unpresented checks, uncredited checks, errors of the bank statement, and the updated cash book balance. And the updated cash book balance. Mark that word, updated cash book balance. Updated cash book balance. Updated cash book balance. Once we have that, you'll find that it will be very easy for us. So these are our steps, which I mentioned that I had to write them so that on explanation the knowledge should sink in very well, because I've mentioned and I'll continue mentioning that our classes are not always for exams, but rather these classes are to build your knowledge when it comes to matters of finance and accounts, not only for exams, not only for exams. So once we have this, the next element here I'll want us to do is to look at the format of bank reconciliation statement, which is also very key. I want us to talk about the format of bank reconciliation statement, which is also very important in our session today. So that should take us to the format of bank reconciliation statement. Format of a bank reconciliation statement. I'll focus on two formats. It will always be upon us to use the best format that we feel very comfortable with. So in this case, we can talk of number one, format one. Format one, it will be like this. I've said I'm going to give you two formats, so it will be upon you to select the format that you feel you are very comfortable with. So format one, maybe at this point, maybe you can talk of maybe mDarasa bank statement, mDarasa bank reconciliation statement, bank reconciliation statement for the month ending, for the month of, say, like January 2022, for the month of January 2022, for the month of January 2022, for the month of January 2022. So in this case, believe that one is visible, for the month of January 2022. So we are going to start with, of course, balance at. So we are going to start with balance at bank as per the cash book. Balance at bank. Balance at bank as per the updated cash book, as per the updated cash book. And Mwalimu is really insisting on the updated cash book. Updated cash book. I'm really insisting on that. So in that case, I'd be having our figures there, right? I'd be having our figure at that point. Then we are going to add the following. We add the following. So we are going to add, believing that is very visible. We are going to add unpresented checks. So we are going to add unpresented checks. The checks that we issue to our suppliers, but they have not yet been reflected. Remember our currency, they have not yet been reflected in our bank statement. Consider errors on bank statement. Errors on bank statements. Errors on bank statement. Errors on bank statement. And the errors that we are adding here, my good students, this is what you should note, is that the errors that we are looking at here, basically, these are types of errors that have an effect of increasing the balance at bank, such as what? Overstated deposits or understated payment by the bank. And actually, let me just put these errors here. Like examples of these errors we are talking of, the one that they do have an effect of increasing the balance at bank, such as overstatement deposits. Overstatement deposits, or understatement payment. Understatement payments. And mark you me that these are errors that are being made by the bank. The ones that are being made by the bank. The ones that are being made by the bank. That is what you should have at the back of your mind. So basically, these are the errors on bank statement. And actually, let me have them here. So that as at the end of the day, we are going to sum up whatever that I'll be having. I'm going to have it there. Then after that case, consider anything that will also affect us, such as what? We less now. Talk of less. We less, number one, uncredited checks. We less uncredited checks. We less uncredited checks. Basically, uncredited checks, these are checks that were expected to be credited in your account but have not yet been credited. So you're talking of uncredited checks. We'll be having it at that point. And errors on the bank statement. Errors on the bank statement. And what are these errors that you're talking about, my good students here? The errors that you're talking about here basically are errors that will have an effect of decreasing the bank balance at bank. Errors that will have an effect of decreasing the balance at bank. E.g., understated deposits, as well as overstated payments. They'll have an impact of reducing our bank balance. So we are going to consider them at that point. So that once we have this, of course, we are going to sum them up. And after we have the sum, I'm going to deduct at that point. So that as at the end of the day, my good students, as at the end of the day, whatever that you're going to arrive at, that should be the exact balance that you're having in our bank statement. So that should give us balance at bank, balance at bank, as per the bank statement, So they should be exactly be the same. So that is our first format, which you can confidently use. The second format will be what? Again, I want us to consider the second format. So, talk of our second format. Allow me to erase this other side so that I can give you the second format. Now, it will always be upon you to select the one that suits you best. So, allow me to erase here and let us look at format number 2. Format number 2. Almost the same concept, but ideally, we're just going to change a bit. So title is always very important. And that's why you'll find that Mwalimu will always start with the title, right? So you're talking of mDarasa bank reconciliation statement. mDarasa bank reconciliation statement. Bank reconciliation statement for the month of January. 2022. For the month of January 2022. So in this case, we are having balance at bank as per the bank statement. That's what you're going to start with. Balance at bank as per the bank statement. Are you seeing the difference? Are you seeing the difference, my good students, compared with the first one? Our currency, never forget. We're going to have it at that point. Then consider adding the following. So you're going to add, these are what you're going to add, the second format you're talking of, format number 2. You're going to add. So you add the following. You add uncredited checks. Uncredited checks. You add uncredited checks. Where uncredited checks, basically, I'll be having it at that point. Consider errors on the bank statement. Errors on the bank statement. Errors on the bank statement. And these are errors that will have an impact of reducing our bank balance. These are errors that will have an impact of reducing our bank balance. For example, you're talking of understated deposits. Understated deposits, as well as overstated payments. Overstated payments. So we should be having it at that point. Determining the total. Then we less those that will have an impact of increasing our bank balances. The one that will have an impact of increasing our bank balances, such as unpresented checks. And these are not errors, first of all. Unpresented checks, first of all, not errors, but considering our unpresented checks. Then the errors now. Errors on the bank statement. Errors on the bank. Errors on the bank statement. Errors on the bank statement. These are errors that will have an impact of course, increasing our aspect of our bank balance, such as overstated deposits. Overstated deposits. And talk about understated payments. Understated payments. So these are what we should be having. So that as at the end of the day, I'll be having our figure there, which should be deducted. So the moment you do have that, confidently, that should give us our balance at bank. Balance at bank as per the updated cash book balance. So you'll find that these are the two formats that you can always tend to use in preparing our bank statement. These are the formats that you must always tend to consider in preparing our bank reconciliation statement. So once we have this knowledge, once we have this concept, it will also be very easy for us to handle any question when it comes to bank reconciliation, and to make sure that we've grasped the concept clearly. There is this question which was tested in April 2022. This question was tested in April 2022. April 2022. April 2022. Question number 5C. April 2022. Question number 5C. So this is a question that was tested in relation to the bank aspect of bank reconciliation statement. So in this case, that is a question that was attested, which I'll want us to consider that question in our next session to handle that question clearly so that we have these concepts. So to that point, guys, thank you so much, and let us meet in our next session whereby you're going to handle this question, which was tested in April 2022, and we'll also consider more questions in relation to the same. Thank you.